Good morning and welcome to the Early Bird Report. And here we're looking at the Chinese market, the Shanghai, and the Shenzhen would be pretty much the same sort of pattern as well. As we can see here, it's a daily chart, and we've moved up through here. We've come across to trading level 3 here at 3,000. This particular pattern that comes down through here is a corrective pattern, as it's in 3 waves, an A, B, and a C, quite large. And we're looking at this one here. Coming up through here as a positive 5-wave structure, but it could also be viewed as a corrective structure as well. So we're not too sure about that, but one of our focus points here is this particular structure here of this, labeling it an A and a B and a C. Where it's pulled back through to here is about the 61.8 retracement level through here. That would come from this low to this high here, then the A wave to here, the B wave back up in 3 waves. That's all quite nice and fitting. So the A wave is nice, the B wave is nice in our view, and we're looking at the C wave down through to here. Now C wave is a 5-wave structure, so we do have 5 waves in through here, and we have pulled this apart to get to that. So we've looked at each one of these little structures here, and the 3rd wave here, and the 4th. The 5th wave is a little bit short here. That's okay, but it does line in with the 61.8 retracement level, and now we're seeing this little sort of push up here. So this is a bit of a sort of a guiding light here in terms of a push up. So I think it's something worth watching as well, especially when we're looking at our market, the ASX 200 at the 4,500 level, and the Dow Jones at 12,000 level as well. So we've got a bit of positive sort of structure here in terms of this low being finished here. So let's see what sort of structure that we get in this development through here. Would expect 5 waves up, 3 waves back, and then another 5 up through there. So we'll see how that goes, and we'll be talking about that as it unfolds. Our local markets, let's just have a look at those for a second. And okay, I'll just wire onto this chart here. This is CBA, and from its lows here, it's climbed back up to $50, which is a major trading level, and then it's just, it's stepping its way up through here. So this is a positive aspect, and what we normally find with finance or banks is that they tend to lead the way. So they're the first ones to rally out of a bear market. In lots of cases, they're the first ones to turn as well. So I think we need to acknowledge what's actually happening here and line this up with the Chinese market as well. That's just one positive aspect. It may not be that positive overall if we have a look at the banking sector. Just bear with me while I just jump into the right watch list here, XXJ on the local market here, and yeah, I haven't labeled this correctly here. I mean, not so much correctly, but Freudian slip. But this move down to here, we could label as wave 1 and back to wave 2 here. And then we've got the 3rd wave down, which would be in 5 waves, and normally the longest and the strongest. So it would be down for 1, 2, 3, 4, and 5, and that would be the bottom of the 3rd wave. That would be the 4th, and that would be the 5th here. Now, once again, that's a little bit short as well, and sort of the Shanghai there. But we just got to be, we'll be mindful of it. This here could be part of a larger 4th wave, and we come down from that point. But we just need to see how we go, and we do need to study these points here, and what we would would expect this. Just naturally, without doing too much here, well, first of all, we expect to bounce off the first minor level below a major level, but also a retest back to the 50 here. And normally a 4th wave pulls back to the 4th wave of 1 lesser degree. So if that was the case, then this wave 4 here would pull back to this 4th wave here because it's of 1 lesser degree, or 40% of the 3rd wave, which would be this structure within here. Which would still leave us up around this sort of area here. So just looking and observing to see if we get this sort of rally here, because the markets are quite bearish, but at the same time we need to be aware if there's going to be any strength in rallies coming into the market, and this is what we see so far. And it's also to sort of support this a little bit as well, but the coming into the futures market here. We've still got the copper market here above the 400 here. It's one market that hasn't gone down and has kept itself quite firm there. So if the Shanghai market's going to rise up there, then we're likely to see this copper market do the same as well. And then we can look at the our local market, the XJO, the cash market, 4,500 here. Now, it's been dancing along this level for a couple of weeks, like it has at the Dow Jones for 12,000. So we're a little bit unsure about the whole process, the patterns and so forth. But the patterns that we're looking at here so far, this is the low here, this move up through here, it appears to be in three waves, and that makes it corrective. So once this corrective pattern's finished, it will continue further to the downside. But that's the point in hand, is that how big is this correction here going to be? How high will it go? That's the question, you know. So this can still move up much higher as well, and we need to keep that into view, and we'll take that position, that thought rather, while the market's above 4,500 here. And I just wanted to point out here as well is that this little structure that's moving up through here appears to be positive. This is just a 1 minute chart, of course, but it's positive. So we're likely to see a 5-wave structure up to here, and then a retest of the 4,500 on Monday or Tuesday, and then we'll see if we push up from there. So we're just seeing the initial parts of this structure sort of unfold here, and if we apply that to the SPY on a sort of 5-minute chart, because the SPY has already got this down movement in here from the overnight markets, and that's its correction across the 4,500 there. But what we're sort of interested in, grabbing at straws a little bit, that's thing, but we're looking at this structure here being 5 waves up through here in terms of, call this up for 1 and back for 2, 5 waves in the 3rd wave here, nice and strong, and then the 4th wave, and then another little 5 waves here to finish the 5th wave up at this stage here. So we'd see this coming back as an A, B, C, an A and a B and a C wave into here. Now, this market is at risk because it's under the 4,500, and it's also under the 4,772 there in this group 2 there. So we can look at the downside situation in a minute, but we're just looking for any possible upside here that we can look at and rule out. Now, if this price here drops below this one here, then what that does, that wipes out that being a 5-way structure and any positive structure building on that. So that low is important for the futures market, but it's also important for the cash market here as well at the 4490 here. So we can, this is moving up, so we'll watch it. And on Monday, this will obviously come down through here because the futures market's already moved down through here. But let's just allow that to sort of happen here and see what sort of support it gets here, and if it can move back up from this point here. If it can move back up from there, then all the positive things that I've just been talking about, we can build on those and we can work with those. I'm just putting them as ideas on the table that we can possibly work with. They could be ruled out quite quickly if this market comes and really locks under the 4-5 here, and on the futures market really drops down below through here as well and takes out the bottom of this here, because that doesn't give us any positive structure from there. This move across here in this structure here is a corrective move. So the whole pattern is corrective and would produce further downside, but this is the first little glimmer of hope that we've got for any upside thing. So we need to see the SPY back up above here, and not taking out this particular low here, but we'll see how we go. The low here is not as important here as it is on this market through here, so it's just something to watch. Okay, so yeah, they're the positive little sort of features there. Also in the in the futures market here, just want to have a look at gold to start with, and this is the gold market here, and it's quite simple. We've come down from this high here of around the 1560. We've come down through here in 5 waves, so it maybe not be finished in here. There's not enough sort of little just the fourth and the fifth wave in here is not complete because got the little, won't go into, we've got the third wave in here, little fourth and fifth in here. So we've got some weakness to come in here. But once we've got this wave one complete with the little 5-wave structure within that there, then we'll be looking for a bounce back for wave two. Now, wave two normally pulls back 61.8% of the 5-wave structure down. We'll keep that in mind, but it's more important to actually just watch the ABC structure that takes place, and we will be counting that because that would be an A and a B and a C, basically a 5-3-5 structure to make that wave two there. That stage. Once that's complete there, then we'll see this market move further down, and that would be the same for silver as well. Do I have silver on here? I thought that I might have had it here, but it'd be the same boat for silver in a sense. This is silver here in the bigger picture here, so it'd be the same here. Just bear with me here a little bit while I just get this sorted out here. But yeah, precious metals the same. So you can see from this point here, we've got down for 1, 2, 3, the big third wave down here, the fourth and the fifth wave coming down through here. So we'll see some sort of ABC back up here, and then we'll see that roll back over there. So good short trades coming up in precious metals. So keep an eye out for those. The oil market, doesn't matter which way you look at it, $90 is support, and we've seen 5 waves come down through here, so we'll be looking for a move back up through here, a bounce off the $90 here, the medium level. So we'll be watching that as well here. That can come back up to the 95 here. Yeah, I wouldn't sort of get into trading this one at the moment. We've had a good run with it coming down through here from the failed retest here. So allow it to do its correction here. It will follow stock. And yeah, so let's just see what sort of rally it has there in terms of stock with the Dow Jones and the S&P 500. Okay, we've got the S&P 500 here. So we can once again see that the important number here is the 72 level, which is part of subgroup 2, which is the 65, 72 and the 80. And you can see this market dancing sideways across here. And what we could say about that is that all this price action here have got overlapping wave structures. The highs and lows are overlapping each other. So it makes it corrective. And if it's corrective, then it's a continuation pattern from the trend down through here. So as we've come down through here, it's corrected sideways across here, overlapping wave structures. So we should make new lows coming down through here. So within those lows there, we'll be looking to coming down to this area here. So it's something that we can look for. If you're trading this market, then we would be looking at it in this terms here. We'd be looking at it coming down for wave 1. This is a 15-minute chart, down for 1, back for 2. Nice strong third wave down, and then a little A, B, and C for the fourth wave here, and then the fifth wave would be down here. I can't work that out. I'm not sure where that is or what's inside of all of that. On the close, it can get a bit messy, but let's just say that it's got a bit further to come down here and perhaps a bounce off this old low here, and then we'll see an A and a B and a C back up here. It can come high back up here to the 61.8% of this whole move down through here, can come back up here. But I was thinking that the better move here would be to look, if it locks under this level here, the 65, and it can't get back up there like it's doing here, then short it down to the 50, not a problem. But if it's going to bounce off this old low over here and finish its wave structure down to this point, look for the A, the B, and the C back up. But once it comes back up to above the 72 level here, once it's above that, yeah, and then it fails, the C wave finishes, and it comes back down this time and gets locked under there, then that would be the point to sell it at. So allow for the correction to unfold, and then wait for it to get back under the 72 there as retested resistance. And remember that gold will be pretty much in the same boat as well. And if we just go on to currencies for one moment and just have a look at the DXY here, because this will be doing, because this particular market here doing its thing, the euro will be doing the opposite, and then the euro will be doing the same thing as the S&P 500. So this is just another way to look at things upside down. Yeah, so what we've been doing through here, we've come back, we're looking up for wave one here, we've come back for the A, the B and the C, and we've worked all this all the way through here quite nicely. And then we're looking for wave one up through to here. So coming back up through here, we understood that we would get some sort of ABC correction across the 76, and then we'll be moving up from that point. So I think I think this is the ABC here in terms of the A wave down, the B wave here, and the C wave here, and this is wave two. Okay, so I think that's up for wave one and that's wave two. I think that's the case. But if I'm wrong, then the C wave hasn't been completed yet. And this would be the top of the B wave here. And then we would have a C wave down to here. Yep. And then would move up through there. So it would be actually an A wave to here, B wave to there, C wave to there, and then we move up. So, but I'll stay with this first one here. I think that's probably a little bit more accurate, but we'll see how we go. So if that's the case there, then this would be part of the next move up. So it would be up for one, back for two, finding support within here, give it some time, time to work out through here. But once you feel that it's tested enough and so forth, then you can actually see it moving up from there. Well, then you would want to run with that move going up. Also shorting the euro, perhaps the Australian dollar, and the stocks would be weak at that point as well. So this will keep a very close eye on this, because the other thing that we like about this situation here is that we're not only going up for one wave one, wave two, going up for wave three. And remember, wave three is always the longest and the strongest. We're also including a bigger structure in here where we're up for one here, back for two here. So we're up for one, back for two, up for one, back for two. So we're in the third of the third wave. So we could see the Dow Jones and the euro and our markets push lower quickly from that. So that's why the rallies on the Shanghai and copper being above that, and our local market being above 4,500, they're all reference points as well, because if they fail at those levels, then we'll be going down quite quickly. And with our market at 4,500, markets normally run quite quickly between the numbers 5 and 3, and 8 and 5, and 5 going back up to 8. Those numbers that can run quite quick through. The 1, 2 and the 3s, it runs through quite sort of slowly. So okay, the flip side to the US dollar here, the mirror image would be the euro here. So with the euro here, I've just got this on a 5-minute chart here, and once again we would be looking for, we've had this move coming down through here, and we're looking for an ABC correction going back up, and we've got this A, this B and this C. That could be enough for the wave two there, and this is the same problem we're having with the euro as well. So that could just be, I know this is a bit confusing, that could just be the A wave to there, the B wave to there, and then we get the C wave coming back up here for that wave two, and then we drop from there. So that's a possibility, but this could also be the ABC here. So that means we come down here for 5 waves, and then we come back up. And so look, what we're looking for here is, if I just put this on the 2-minute chart here, no, it's gone way off. Let's come back to here, save a bit of time. So this is sort of how to handle the situation here in terms of actually trading. We can see that the 142 here is was support, and now it's acting as resistance. So if that market moves above that 142 and starts to develop support on it, then we can expect that C wave to move further to the upside. So that's one scenario, and yeah, and you wouldn't go long until you had that support on the 142. So even knowing that bit of information makes it makes the trade a bit more successful. So you wouldn't buy under such a level. You wouldn't buy into supply like that. So if that's going to be the resistance there, then you could use the subgroup 2 area here, the 72 here, as resistance to get any short trades to the downside from there. So that would be the trigger south. And the Australian market as well. Right, we can see that it's not the first time it's been bouncing across here, but we figured we're pretty much got all this sort of right here. We've got down for 1 here, and we're looking for an ABC back for 2. Well, we were talking on Friday of this coming back to the 61.8 retracement level, which was close to the 72 mark here, but it's come back up and hit wherever it's hit, the 106, and that's fine. So we're looking at this market edge to these lines were from Friday, so don't worry about those. So we're looking at this particular structure here, and we'd also be looking at, because that was a corrective move up there for wave 2, now we're looking at down for 1, 2, 3, 4, and 5 down to here. So we should see a rally back. But if we see a rally back above here, the next time it comes back down through the 105 there, we could take that short there. I'll just have a look on the 2-minute chart to see what I've done or haven't done here. So, okay. Okay, so this is this move down here. You can see the 5 waves down. So we've got down for wave 1, the A, the B, and the C for wave 2 there. Then we've got the wave 3 down here and the wave 4 up here to this point. Then we've got, I'm just assuming this down for wave 1 here, back for wave 2, down for wave 3, back for wave 4, and wave 5 is to come down through here. So we're at the 105 here. I'm just assuming that wave 5 can be finished there and we go straight back up through here as an ABC correction, pulling back up 50 or 61.8%. The bottom line is that this big chunk over here is the supply where the volume's been sitting, and this is it also over here as well. So there will be struggles. There'll be struggles at the 105. There'll be struggles all the way through here, but we just need to be mindful that it can come back up to the 61.8 retracement level. So we'll see how we go with that. But the point now that this market has actually pierced through here, it can come, the next time it comes back through this, then it will come back through it quicker. So just bear that in mind. So we probably get a bounce off here, back up here somewhere in an ABC correction. But the next time it comes down would be the one to short it at that point there. So but being under 105 creates sort of weakness in the bigger picture as well. So just be aware of that. Alrighty. I think that sort of covers it. So the precious metals are at very weak points. So is the Dow Jones. The only sort of positive things are in the Shanghai and in our market being led by the bank. So we'll be watching the positive aspects within the market and also the weak aspects within the market. Alrighty, good morning and good luck.